Well, great. Well, formal good morning or afternoon, and welcome to our first work group meeting for development of a protocol for early plugging of oil and gas wells, marginal and gas wells in the United States. This is our first technical work group meeting, and thank you again for your time and applying to be on the work group. We're quite excited to kick things off. We'll take now a few minutes for housekeeping and introductions before moving forward in the agenda. Uh, Housekeeping observers, this is open to the public through our transparent protocol development process. So anyone can register and join, whether it's interested stakeholders or other interested parties. They are on listen only mode, but observers can ask questions. I believe it's in the Q&A function, and we'll be monitoring that. We just kindly ask that you keep the comments concise and relevant to the topic of conversation so we can do our best to manage the discussion. Work group members who are on screen now are panelists on Zoom, so you should have access to unmute yourself, turn on and off your camera, uh, and um, and actively participate throughout the work group meeting. When we open up the discussion, you can feel free to use your raise hand function to signal to us that you have a question or a comment on what we're discussing. As workgroup members, you can also provide comments or questions in the chat function, I believe, if you prefer. But as always, it's a bit more challenging for us to manage both the chat function and the workgroup discussion. We'll do our best, but there are both avenues for you to raise your hand and make comments verbally, or you can also put comments in the chat function. Just ensure that you are addressing the comments to everyone, or it will just go to us as hosts, I believe, if you intend for it to be a comment for everyone to see. And at the end of the work group meeting, we will summarize any unanswered questions, which we will discuss at a next work group meeting or make public. And we'll also post a copy of this slide deck and a recording of the meeting on our webpage. So my name is Mackenzie Smith. I'm Associate Director of Strategic Implementation at the Reserve, and I'll be serving as the protocol development lead for this protocol. I have been with the Reserve for about 3 years now, a little over 3 years. I work on our analytical team. I oversee our agricultural work, but I also support our industrial work, which brings me to this development process. Previous to my role here, I spent about 5 years in the fertilizer industry, which helped get my feet wet on industrial policy and environmental work. I'm joined by two of my colleagues, Rachel Mooney, Manager of Protocol Development, and Jordan Mao, Senior Associate of Strategic Implementation, who will both be supporting the development of this protocol for the Reserve. I'd also like to note that we received partial technical support from Climate Wells. Reed Calhoun is joining us on the technical work group and their collaborators. They shared helpful information to help draft the protocol that we'll now be reviewing and discussing with you all from a technical work group perspective. So now I'll ask each work group member, we'll take a few minutes for you to briefly introduce yourselves and get to know each other before we jump into the discussion. If you can quickly say your name, your organization, and your background or experience as it pertains to oil and gas industry or plugging of oil and gas wells. I will go through the list that's on my screen. Hopefully we won't miss anyone. And I know there are a couple of work group members that unfortunately couldn't attend today. So I don't believe Dan Arthur could attend, unfortunately. He's at a conference. He emailed me this morning. So I'll move next to Arjun. If you don't mind introducing yourself.
Hi there. Can you hear me? See me?
Mm-hmm. Yes.
Yeah, Arjun Patney. I'm here on behalf of Avondale Private Capital, which provides debt and insurance solutions in the carbon offset space. I've been in the carbon markets about 17 years in different roles in trading origination and policy. And just prior to Avondale, I was with BP.
Great, thank you. Happy to have you. Next on the list here, I have Heather Rogers. If you don't mind introducing yourself briefly.
Hi, everyone. Heather Rogers. I'm the Senior Director of Sustainability and Environmental Markets at California Resources Corporation. We're the largest oil and gas producer in California, and we also have a robust carbon management business. This is something we're really interested and excited to be here. So thank you for inviting us to the working group. And prior to CRC, which I've been with for a little over a year, I worked at A New Climate and I did a variety of different roles with them, but project development, origination, yeah, and so familiar with the carbon offset space. I've read many a protocols in my day, so looking forward to the discussion.
Great, thanks, Heather. Punet.
Hi, my name is Puneet Chopra. I am Associate Director at the Carbon Containment Lab. The Carbon Containment Lab is a 501(c)(3) nonprofit located in New Haven, Connecticut. The lab is about 18 or so people with experience all across different areas of climate research, whether it be market research, investments, technical knowledge. We have people from the oil and gas industry in our group. Me personally, my background is in chemical engineering with a strong focus on measurement and instrumentation as it relates to gas and particle phase components. So really interested to understand the measurement side of this methodology. I also have a MBA in sustainability from Yale.
Amazing, thanks for joining. Reed.
Hey everyone, my name is Reed Calhoun. I'm the CEO of Climate Wells. We are the original authors of this draft protocol. We've been working on shutting down old wells for carbon credits for about 5 years. So far, we've done two projects. We're working on our third now. Excited to be involved here. My background is in old oil and gas wells, primarily for about a decade. So excited to receive you all's assistance in developing this methodology. Excited to partner with Climate Action Reserve.
Thanks, Reed. Miguel.
Yeah, hello everyone. My name is Miguel. I am part of the engineers. This was a collaborator with Reed in developing the first version of the methodology. My background is in chemical engineering, and I also been in validation and verification for over 5, 6 years in Latin America, the US, and of course Canada. And I've been also helping climate action reserve and some of the registries to develop integrity methodologies like this. So I'm very excited to be here.
Thanks, Miguel. Margaret.
Hi, I'm Meg Coleman. I'm with the Environmental Defense Fund, where I've been working for the last 2 years. And I'm a senior policy manager, and I work on orphan and end-of-life wells with Adam Peltz, who many of you know, who's been very active in this space for a long time. And before EDF, I was with GTI Energy for about a year and a half, and I led the protocol development for Veritas there. And before that, I was with the Energy Information Administration for about 12 years, working in upstream oil and gas analysis. I'm a structural geologist by training. I have a PhD from MIT in structural geology, and appreciate being able to join this, where EDF is interested in learning more about the voluntary carbon market as it relates to marginal wells. So thanks.
Great, thank you for joining. Jay.
Good morning. My name is Jay Wintergreen. I'm a senior associate with First Environment. We are First Environment is an ANAB accredited greenhouse gas verification body. We've been providing verification services to the carbon market for about 20 years now, including both compliance markets, the state markets, as well as the voluntary markets, including the Climate Action Registry for numerous years under various protocols. I myself am a CARB oil and gas approved specialist, so that's a little background, and have recently been involved with orphan well plugging projects, which I know is a little bit different, but there are some issues that I think I can represent to this group from that experience. And again, glad to participate in this process. Thank you.
Great, thanks, Jay. John, or maybe do you go by Wes? Am I correct?
Yes, I do go by Wes. Legal name's John Brook. You can call me Wes. I work in the oil and gas industry. That's where I started about 14 years ago. Then came on and represented oil and gas operators, and now I represent Franklin Well Services, the name you see there. They've been plugging, cementing oil and gas carbon sequestration wells for about 25 years and working with various cement blends and different oil and gas wells all out Illinois, Indiana, Kentucky, and several other states. And we got into the carbon capture business about 3 or 4 years ago. So we're also an offset project operator for coal mine methane, and really excited to be here.
Great, thanks for joining. Michael, I'm not sure if he was able to join.
My background, well, hello, everybody. Glad to be here and hear more about this project. My background is kind of downstream oil and gas, blending and packaging. We've built and sold a couple companies in the past. And as of late, I've become a project developer for my company. I'm the founding partner called PermCab GHG. We worked in the orphan well space under a competing registry and completed a pilot project. And I've been, looking at this particular protocol for a while. So, kind of like Jay, the orphan well stuff is a little different than this, but I'm hopeful that I can add some value to this process.
Okay, thank you. I don't see Jason on my screen. Rachel, I don't think he was able to join today. Beth?
Hi, I'm Beth Bader, a verifier with SES Inc. We're a VBB. We have been working with verification in carbon markets all the way back to 2004 with the Chicago Climate Exchange. We're accredited under scopes 1 and 2 with ANAB for the voluntary market. We also work in the compliance market, so California ARB, Washington Ecology. We do digester, mine methane, and ODS projects there. And we've got a couple projects that we've worked on for the orphaned well protocol.
Amazing, thanks, Beth. Isai, I hope I'm saying that correctly.
Thank you. Yes. Hi, everyone. My name is Isai Medellin. I'm a manager of low carbon initiatives to South America. We're also a verification body, which formerly was Rubicon Environmental. I've been with the company for almost 4 years, and I manage mostly industrial low carbon projects. I also participated in some orphan wells verifications, and I've been a verifier for over 6 years. And my background is in chemical engineering. I'm very excited to be here and contribute to this project. Thank you for having me.
And Mark with Zero Wells did email me and say he was on an international flight at this time and couldn't join. I don't know. He was maybe going to send someone else from Zero Wells. I don't know, Rachel, if there's anyone online to promote into the panelists, but if not, I think that's everyone, unless I unintentionally missed anyone, because we're very happy to have you all here. Rachel, did I miss anyone, or is there anyone else to be added in?
No, that's it. We never got a response from Zero Wells of who they'd send in his place.
Okay.
go ahead.
Great. Well, thank you all very much for being here this morning or this afternoon, depending where you're located. We really appreciate your time. We'll go over a little bit more of what you can expect from the work group in terms of process, if you're not familiar with our process and expected timelines and whatnot. But as I mentioned at the top of the call, we do record all of our work groups and also post the slides online. So we hope that you'll all be able to attend and participate in active discussions for these few meetings that we're expecting in January and early February. But if for whatever reason you have scheduling conflicts, like some of the work group members on this list unfortunately had today, we are able to share a recording and a copy of the deck with them, for lack of a better way to say it, to kind of catch up or offer their thoughts that they weren't able to during this active discussion before our next work group meeting. So today's meeting is fairly short. It's an hour. We wanted to hold it for purposes of introductions and to give you an explanation in more detail of what you can expect from the work group. We know that this is coming up close after the new year and the holiday season, so we don't expect, as I said in my emails, for you to have dug into any of the specifics that we've shared yet, but recognize that you all, of course, as you shared, have a vast amount of experience in this space already to share and comment on during the discussion. So today's agenda, we're hoping to get through the introductions in about 15 minutes, and we're a few minutes late. But I will turn it over to Jordan, my colleague here shortly, who will go over a handful of slides just on the protocol development process with us and our expected timeline. So you as active work group members know what we are asking of you and what you can expect. But I'll pause here before we jump into that and just ask if there are any questions on housekeeping or next steps for today's agenda. I should say after we talk about that, we do have some key considerations to jump into, primarily sections 2 definitions and some potentially of eligibility today, which we did share with you in a request for feedback form. So we will start to jump into the discussion more detail, but not too much within the hour that we have. Any initial questions, comments from anyone before we go to the next part of the agenda? Okay, I'll turn it over to you, Jordan, for a few slides on what the work group can expect.
Great, thank you. So I'm going to go over the development process and timeline in these next few slides. Mackenzie, it looks like I'm unable to advance the slides. So the reserve creates jurisdiction-specific protocols using standardized greenhouse gas accounting approaches. So we assess the common practice in each jurisdiction with expert stakeholders in the region during protocol development. Essentially, we are doing the validation process upfront during protocol development, and the protocol will outline eligibility and additionality requirements. Therefore, there's no traditional validation process under our programs for the project developer. Because we take this approach, we are able to provide standardized greenhouse gas quantification and monitoring requirements for each project. As a result, our process minimizes personal judgment by all individuals involved in project assessment and provides stability and certainty to project developers and investors because they can read our protocols and determine if their project is eligible and how to develop their projects for eligibility. And by not requiring a validation process, it also removes the cost associated with validation body review. On the next slide, Mackenzie, if you could advance the next slide to modular protocol development. So this is a new process at the reserve, which consists of a base protocol and then a complementary jurisdictional protocol. So for this protocol, we currently we are establishing the base protocol that will cover common guidance for the project type that can be shared in the future with different jurisdictions. So the protocol in the future is open to be tailored to various regions, and the projects will be listed under both a base protocol and an accompanying jurisdictional protocol. The intent of this new method is to maintain the jurisdictional approach that we have always had, and assess common practice in each country, but also streamlining for future development and expansion across the world. So we will continue to look at each country's laws and adoption rates of various practices, but since it'll be modular, we can more efficiently expand where applicable. This expansion will not be a part of this work group's discussion, but rather may occur in the future. So as you know, this is the protocol for US. On the next slide, we have the protocol development timeline. Mackenzie, if you could advance that. So the pale blue boxes are previous events, while the darker blue are current and future milestones. This is a tentative schedule, subject to unexpected changes that could arise during development. But we are moving forward with reaching public consultation period between mid-February and mid-March, and going to the board for adoption of the protocol in April of 2026. On the next slide, we have a more detailed process and timeline here. We are still scheduling the second and third work group meetings. So please fill out the doodle polls that Mackenzie sent via email on December 23rd by the end of this week or earlier if possible. And then on the next slide, we have more details on what to expect from the reserve as a work group. So the reserve will be sharing draft protocol sections and items for work group review prior to each meeting, prior to the second and third meetings. And then we will, of course, hold work group meetings to facilitate discussions on key aspects of the protocol. So yeah, we will aim to meet a consensus with everyone in the work group where possible. But when consensus may not be achievable, the reserve maintains the right to act as the final arbiter of all protocol related decisions. As work group members, everyone should be an active participant in this development process. That includes providing verbal feedback during work group meetings and also written feedback on draft sections. Each organization can only have one representative present in work group meetings, but if the main designee is unable to join, please let us know who you would be able to send from your organization on your behalf. And lastly, just a few notes on providing feedback. We would greatly appreciate all reasoning and justification for your position or comment, sources or references, or stating context or anecdotal evidence, and any recommendations or solutions to alternatives.
Thanks, Jordan. I appreciate it. Hopefully that's a helpful and concise summary of sort of how this works and the timelines and what we expect. I will just jump back to this slide. There's a lot of dates and information. This will be shared with you, so no need to jot it down or copy it here. This is sort of a running milestone list for us who are administering the protocol development process and have what deadlines and timelines we need to hit in order to make it to a 30-day public comment period in time to then present things to our board. We are targeting an April board meeting 2026, but you'll see it says TBD. We, of course, are setting these timelines. So we, if needed, if there are further discussions with the work group that are needed, or if we need to circle back after public comment or anything like that, that may extend the timelines. So we'll keep you updated as anything changes, but this is our ambitious target is to publish by April. I've highlighted in yellow here that we're targeting to have another couple of meetings in the next month, I guess now. So we kindly ask that you complete the doodle polls that we sent out as soon as possible so that we can get those in the calendar and have as many work group members available as possible. The February 5th deadline, what we've put in there is that sort of the last date of when we need all of our feedback to compile everything into the draft that would go out for public comment. So right now we have shared a request for feedback that is not inclusive of the entire protocol. It is only the first few sections to get us started. We will send out additional documents that request your feedback on later sections on quantification, monitoring, reporting, and verification. And then all of those would be due. So you can hold on to them for as short or as long as you'd like. If you'd like to sort of wrap up your comments on the sections that have been discussed in parallel to the work group, you can feel free to email those comments and written responses to us whenever, or you can elect to, if you prefer to see the protocol in its entirety and write down all of your comments and send it in by the deadline, that's up to you as well. So hopefully that's welcomed flexibility, but let us know if you have any questions, concerns, or would like to do things differently. Any questions, comments, feedback from the work group before we're right at the half-hour mark and jump into the meat and potatoes of the discussion? Okay, not seeing any raised hands or any confused faces, I'll move into the key considerations for protocol development. The first section is section 2, which really defines the greenhouse gas reduction project. If you're familiar with our protocols, this won't be a surprise. Lots of words on these slides now. We're getting into a little bit more of the thick of it, so bear with us, or me. We know that there are, so this is project definition. This is really what the protocol is. What is the action that's going to be taken to result in emission reductions that will be quantified and credited? And it's pretty straightforward. This protocol is obviously for plugging wells. What kind of wells? In this case, marginally producing wells in the United States. You can see the proposal of what the definition is currently on our screen, on the screen, and what we're asking for feedback on. I'll briefly say when we were doing research and review of this protocol concept, and as many of you mentioned in your introductions, we became quickly aware that there are different types of wells across the US. I'll be so bold to categorize them into active, marginally producing, and orphaned or abandoned. I'm sure you can draw a lot more lines within that spectrum than I just did. For a variety of reasons, we presented the opportunity to plug marginal wells, as well as the action of plugging orphaned and abandoned wells to our board, and they decided to move forward with our recommendation to first develop a protocol for plugging marginal wells. That's not to say that we don't see an opportunity, a very important opportunity, to also support plugging of orphaned or abandoned wells. Right now, we're envisioning that this work group would focus on marginal wells so that we can make sure that the definition and the additionality test and things are very clear for that type of well. But we're hopeful that that would expedite the process to develop a separate protocol or some sort of module for supporting orphaned and abandoned wells. So right now we have the proposal of that the project definition would be avoidance of production associated GHG emissions from marginal oil and gas wells by decommissioning and plugging these wells early and keeping hydrocarbons underground. Seems straightforward, but we hang our hat quite a bit on this definition in terms of what is the scope of a project and what does it mean. So open to any thoughts you may have. Other questions that we've come up with to start the conversation are, is there a need to define what early means within the protocol? When were they going to plug the well? Is that something we know? And is early a certain time period ahead of that? Should that be included? We also have a proposed definition for how to define marginal wells, so that we can make sure that everyone's clear on what types of wells we're talking about that are eligible under the protocol. I'll pause there. I see there's already a couple of hands raised, so maybe we'll start with the second bullet point on just the proposal of the actual definition. And even it's open to any comments you might have on what I said about, different types of wells and everything else. So Arjun, I think you're first on my screen.
Yeah, I just wanted to sort of start off with a fundamental question. Is there a reason as to why the protocol should be limited to marginal wells as opposed to those that are still considered active, producing more than 15 barrels of oil or oil equivalent per day? I mean, obviously, the most likely candidates would be wells that aren't producing very much anymore. But is there a reason that we should be disallowing those that are still not considered marginal?
The two that the primary probably reason that comes to mind, and I'm open, of course, to other comments from my colleagues or work group members, but one would be leakage. How would we manage that? So in terms of if you're plugging an active well, that production of oil is coming to a halt, and arguably the market in terms of like a leakage mechanism kind of discussion, the market still needs that oil and gas. So would there be an unintended consequence of shifting production of that actively producing well to another well that's owned by that same company or someone else in the market to fill that gap? I think that's the biggest concern.
Sure, yeah, market leakage could be higher. If you're taking more oil off the market, it would seems to stand to reason. Yeah.
I see Reed's burning to add a couple of comments. I assume there's some financials and additionality concerns, other things as well. But I don't mean to, I think Reed, maybe you have something to say on this, so.
Sure. A quick clarifying question. Has this group received the 40-page draft methodology?
Not yet.
Okay. There are a lot of answers to questions that may be asked that sit within there, but I'm happy to speak to the one that you asked, Arjun, and then I'll give my thoughts on this question. So when we decided on marginal wells, there were a couple of reasons. The one is that we need the well to be past its terminal decline. Wells that are high producing are typically earlier in their decline and less predictable as to what they're going to produce over time in the future. And since this methodology is based on the amount it will produce in between the time in which it's plugged and when it would have been plugged in a business as usual case, we need that amount of production to be very predictable. So wells that are marginal are almost always past the point of that decline and they're at a flat or relatively flat production rate. And so broadcasting out what they will produce in between the date that they're plugged under the methodology and when they would have been plugged is much easier versus something that is maybe a year old and going to decline at some rate we can't really predict. We looked at the studies on this, and across the board, there are issues with trying to predict what a well that is high producing is going to produce. There are far less issues. In fact, most studies say it's above 90% accurate if it's past its terminal decline. The petroleum engineers out there can do pretty good analysis there. The other reason, or a couple other reasons, from a narrative point of view, most of the think tanks that focus on this, like the Rocky Mountain Institute and EDF and Climate Action, or the Clean Air Task Force, say that marginal wells make up 60-70% of the emissions or methane emissions come from the oil field. So using that same vocabulary allowed us to really target like this large emission source. We do want to avoid a local production shock. So if we shut down a bunch of super high producing wells all in one area, we may actually cause a real issue for the amount of production that area needs. Whereas if we're shutting down lower production wells, our risk of local supply shock is lower. The last thing that I will say on this marginal case is there's a lot of things in the methodology that either arbitrarily or rationally limit scope. This is a risky thing to focus on, trying to create credits for oil and gas companies decommissioned earlier. So we tried to limit it to the lowest production wells in order to limit the amount of credits issued for any given project. But we do have 700,000 marginal wells across the country. So there should be a scale that's available. These are the highest emission per barrel wells, are marginal wells. And so that's what we limited it to. The last point there, we picked the name marginal because it was a catch-all for wells that are at their terminal decline. We don't actually care if the well is producing 15 or 16 or 17 barrels per day. What we care is that it's predictable, that it is past its terminal decline, that it is old, and that it has very predictable production up until the time at which it would have been plugged. The methodology as written today actually allows up to 75 barrels of oil per day, because what we found is when we looked at a field of a bunch of marginal wells, there's like one well that's producing 60 barrels. And if we couldn't that well, they weren't going to plug the whole field of a bunch of 5-barrel-a-day wells. So what you're hearing from me is it needs to be old, it needs to be in its terminal decline. It doesn't necessarily have to be like 15 barrels of oil or beneath in order to be applicable. To the question that you've proposed here, McKinsey, I thought production associated is helpful. The way the methodology works is using an LCA on emissions. So it's both the upstream, midstream, and downstream emissions for every barrel of oil that is sequestered between the time period in which the methodology empowers plugging and when it would have been plugged. So it may be helpful to say production and use associated greenhouse gas emissions. Is there a need to define early? The way it's defined currently is that any well that is plugged while currently active and while it has remaining economic, proved, developed producing reserves, if not required by law to be plugged, would be early. I'll stop there.
Thank you. Arjun, did you want to follow up?
Yeah, I
That maybe
just
before
wanted,
moving on.
just one
JS,
little
your hand.
clarification then. Reed, I really appreciate all that explanation. You mentioned there that some wells, like you mentioned that example of a well field that had one that's producing a lot more, that only then it would make it worthwhile to close the wells. Are you then suggesting that the eligibility be broadened to include some wells that produce more, or how are you thinking about that?
We use the catch-all term marginal. However, the methodology is written at 75 barrels of oil equivalent per day or less, even though the common term for marginal is 15.
Yeah.
When we brought this out to actually do projects, we found that most of the wells were 15 or below, but there would be a couple that were producing higher. Again, we use that term because it simplifies things. If I get into like the well needs to be past its like terminal decline rate, then there's a little bit of subjectivity into like what does that really mean, and defining on a per well basis what terminal decline is gets sort of complicated. So we decided that marginal and setting it at 75 barrels of oil per day was a good enough line in order to make sure that wells were past that level of predictability.
Interesting. Okay, thank you.
One last point here: leakage actually should not be different whether you're plugging a well that's producing 5 million barrels a day or one that's producing 1 barrel a day. The leakage studies that are out there and the models have been done by RMI indicate that even at the marginal level, about 57% of the emissions of every barrel are replaced through other sources. So we kept it to a low production rate for the reasons I indicated, not necessarily for leakage.
Okay.
Thanks, Reed. And yeah, an important note for the following bullet point, we've highlighted the Department of Energy definition here, the U.S. Department of Energy. But obviously there are other definitions like Reed mentioned in terms of marginal and what we should be using in this protocol is still up for debate and question and thoughts from you all. So that's a proposal. These are other thoughts. That's helpful. Thanks, Reed. Jay, I think.
So I just wanted to highlight one word in this definition, which was wells, and kind of share a lesson learned from some of the orphan wells experience, which is that was our experience. It was our experience with the orphan wells that with these well plugging projects, the target project is not a single well, that it's usually multiple wells. And we were approached with, people who initially wanted to do 10, 20, 30, 50 wells as part of their project. And so if the definition does allow that, I think that needs to be considered kind of in all aspects of the protocol going forward, because there's a big difference between doing a single well and doing a 100 well project. And so I just wanted to kind of frame that up front, because again, we found that to be very quickly under orphan wells part of the discussion. How many wells can we do? And like I said, it becomes tricky once you get more than a single well. Thanks.
Thank you. That's helpful to know. I made a note. I'm sure Rachel has as well. We do have flexibility with how we define it, as most of you probably know, or if we do any sort of cooperatives or things too. That's a question, meaning that maybe there'd be some help to streamline administration of multiple wells, but it wouldn't all be under one project. I don't know yet, but we have some options. Miguel?
Yeah, thanks, Mackenzie. Just one question. First of all, just as a clarification, is this methodology just going to be eligible for US, geographically speaking? Okay.
Yes.
Yeah,
Yeah.
then-
Right now.
Mhm.
Yeah, we are working, as Jordan mentioned briefly, on finding efficiencies to broadening our protocols to other jurisdictions, but this would be a base protocol with a US module. So it would be only applicable to the US, but we're hoping we could quickly do a review of different countries and regions. Still, I shouldn't say quickly, efficiently, still considering jurisdictional considerations, but to broaden it.
Yeah, because depending on the jurisdictions, there could be different definitions for what early would mean here. So I think, first of all, one of my proposals for this one is that we define early as first the production decline curve approach, I think, and that would be like the tail in the end. That's possible because that would mean that specific well would be marginal. That's a tail. So wells would have to be producing more than 50% of their peak marginal rate, I think, just to make sure that these wells are marginal. And yeah, like one of the first versions of the methodology was that we needed to certify this that there is still some reserves left by a professional engineering firm. So that's also something that is on the table.
Yes, it is
Yeah.
still on the table. Thank you.
And yeah, no problem. So I think that those are my first approaches. Yep, thanks.
Okay, thank you. Yeah, taking note of sort of the decline curve and what within that would we define to be eligible, and then the certification of it being marginal as well. Thank you. Margaret?
Oh, yeah, hi. So in terms of the definition, you're using the DOE definition, which is just production based. And I was curious if you'd considered using like the IRS definition or other definitions that are more economically based. And just in looking at the sort of the nationwide distribution of marginal wells, you look at the 15 BOE or less, that makes up about 5 or 6% of domestic production. Whereas if you go to the 0 to 1 BOE equivalent, those wells produce less than a percent of US production. So you wouldn't have the same leakage concerns if you went to the actual economically marginal wells. So I'm not necessarily advocating that. I guess it's just a question. And have you considered that? I mean, maybe you don't generate enough carbon credits then if you're looking at wells that don't have enough of, if they're producing that little. So perhaps that's the issue. But then you get into the issue also of if you have a solvent owner of record, they're actually legally required to plug the well anyway. So then you have an additionality problem.
Exactly. Yeah, thank you for highlighting. I wasn't aware of the IRS definitions as something we can look at and at least consider and compare. But you're exactly right. I think that sweet spot between something being additional and also not having other concerns when it comes to leakage. Thank you. Miguel, did you have your hand up again, or that's okay. Just checking. Wes?
Your DOE definition, where it talks about vertically drilled or slightly deviated wells, that would appear to not allow for horizontal wells.
Mm.
And when you're talking about leaking emissions, something that's been drilled maybe, let's just say 1,000 feet vertically and then 4,000 feet horizontally. If you leave out those horizontal wells, those are going to be some of your bigger producers of methane and the bigger problem, especially in a marginal well situation. So that's just something I wanted to point out because that could lead to something. And the documentation provided during verification to demonstrate production levels. Just in this area, third-party run tickets and third-party pipeline gas line sales would be potential sources that were outside of the project operator or the verifier. That it would have a separate third party, and I think that would be the route you would want to try and go down. That may not be the case in every situation. Now, in some cases, you'll have a single point of sale for an entire gas field, and then that's all that's being monitored by the pipeline. And then all of the other monitoring systems are owned by the natural gas field operator because they're measuring it per well because they have to pay a royalty to the landowner. So you may not be able to do that in all circumstances. But most, if not all, that I'm aware of, oil and gas or oil producers, you're going to have some kind of run ticket that's coming off the tank battery itself when the oil gets picked up, and you'd be able to back into that on what was being produced there.
Great, thank you. Super helpful. Reed?
So what's been proposed so far is using a definition of 75 barrels a day, barrels of oil equivalent per day or less, not necessarily specific to the like vertical versus non-vertical piece of the definition, Wes. And again, the reason for that is just to make sure that the well is past its terminal decline, just to make it predictable, not necessarily to try and like get into other issues. For the economic definition under the IRS, most of the time wells that are producing 1 to 2 barrels of oil equivalent per day, while they may still have meaningful economic reserves, they'd have to have 20, 30, 40 years at that level to be enough to create a highly economic carbon credit project. I'm finding that the majority of the projects that we see are producing at least 4 or 5 barrels of oil equivalent per day, but not as much as like 50 or 60. And as far as documentation, one of the things that has been proposed is that you kind of can kill two birds with one stone on documentation. You have a professional petroleum engineering firm that meets certain size and independence standards. Think Ryder Scott, Netherlands, Sewell, very, very large firms. They can tell you and certify the amount of production that's coming off the wells, the amount of economic PDP or 1P reserves that they're crediting with being abated by plugging the well early, as well as permanence. So they're going to do a geologic review of the wells to see that if I plug one well here, is its production going to communicate to other producers nearby? And so by using that one group as the third party, it takes a lot of control out of the project developer's hands, which is, we think, a good thing in both baselining, in applicability, and in permanence.
Thanks. Rachel, did you want to jump in with any questions? I know you're monitoring some of the chat and Q&A.
It was more so a follow-up to what Wes had said, and I guess Reed touched on it a little bit as well. We had that proposed definition from the DOE, and just checking in to see if there was any reason why, like maybe we would limit it for vertical or slightly deviated drilling versus horizontal, if that it provides any specific concerns that should be addressed in the protocol, or if the group doesn't consider that to necessarily impact the protocol definition or the project definition here.
I think you're muted, Mackenzie.
Hey, Mackenzie, there we go.
Thank you. Sorry. Thank you, Rachel. I think something to think about. I'm just being mindful of time. Probably we'll only be able to wrap up the definition today, and that's okay. We knew we only had an hour. Our later work group meetings will be maybe a couple of hours, and we'll jump right in. But I see, Miguel, you have your hand up.
Sorry. I think that's I'm not opposed to that to horizontal drilling, but not sure if that has some implications on that. And but also it's maybe important also here to highlight that it doesn't say explicitly production average of 15 barrels of oil or 90,000. Maybe it's implicit, but maybe we want to make it more explicit. Like this is the average. And also another important item here is what happens if the well was for some reason put on pause or in idling conditions, and for several reasons, I think for maintenance or other things that may not be necessarily show that to 12 months. So maybe add some language there regarding to operational or normal conditions. We will have to also add another definition for what's normal.
Okay, thank you. Reed?
Miguel, I think your note on average production over 15 makes sense. Heck, you helped write part of the protocol, so I think you're aware of some of the issues here. As far as its active status, the proposed definition is that the well has to produce above 0 barrels of oil equivalent per day for 7 of the last 12 months to be considered active, which does mean it could have, not posted public production for 1 or 2 months the previous year, which we see as pretty standard for wells that are super low production. They won't post active production every single month.
Thank you. Any other comments or questions? With only 5 minutes left in our meeting today, I'm hesitant to jump into another topic and leave it in the middle of discussion. So I think it probably makes the most sense to see if you have any other comments or questions on this one. We have been taking notes. I've been taking notes. I think the biggest things I've flagged here right now, having not yet convened with my colleagues, but is, noting in the definition around wells, is that a single well or multiple wells? What does that mean? Questions around obviously the definition of marginal wells. How are we going to define it? Is it production? Is it other definitions? Questions around the number of barrels, and questions around horizontal wells not being in here as well. And then of course, like average production, decline curve, some different comments there as well. We can circle back, of course, with all of those comments, what has been said, what's available, what some of the science or other information is, pointing to, and share that back with the group. Did I miss anything from this discussion though at this time, or was there anything else that anyone wanted to flag before I sort of jump into next steps and wrap things up for today? Okay. So we have project definition. We have a lot of other slides here that we weren't sure how much we would get into. This is good to know. In terms of next steps, we did share the doodle polls. I think we will schedule these meetings for probably 2 hours. I'm hesitant to make them longer than that to, respect your schedules and length of meetings. But at the same time, know that with introductions in an hour, we really were only able to get through kind of one topic, which is fine, but good to know. So if you can, please provide your availability if you haven't already via the link to doodle polls in our email. We will get working on scheduling those for later in the month as soon as possible. You do have the request for feedback document on these initial sections of the protocol that will be at the next meeting because we didn't discuss them today. So hopefully that's helpful background and information to know what type of discussion we'll be having. Of course, feel free to share anything in writing between now and the meeting or not. We're not looking for anything final, as I said, until February 5th right now. That's all on the screen. You should have my email if you have any questions, comments, concerns. Always feel free to reach out. And for us, we'll be, as I said, scheduling the next meetings and sending out draft notes and takeaways from this call. And also we'll be publishing the recording, the presentation, and the notes as well. We will review as well what information we have in terms of the draft protocol. We've shared with you what the proposals are, but we will review if we need to share additional background information or the draft protocol as it exists right now. So I'll review that internally to make sure you have all the information you can and should have as soon as possible before additional discussions. With a minute to spare, I think that's it from us. It was lovely to meet you all virtually and put faces to the names. So thank you very much for your time. Thank you for participating today and agreeing to share your expertise on the work group. As I said, don't hesitate to reach out to me directly if you have any questions, comments, or are missing any information. And thank you again. I hope you have a great rest of your day.
Thank you.
Thank
Well,
you.
thank you, everyone.
Thank you.
Thank you. Bye-bye.